Payday loans carry an average interest rate of nearly 400%, creating debt traps impossible for consumers to get out of. It's why Liberty voters decided in November to pass limits on payday lenders.
But advocates say a bill on its way to the governor's desk in Missouri could undo certain protections. Our consumer investigator, REID, explains for The Rebound. KC.
These are businesses people turn to as a last resort, offering high interest rates that often dig borrowers into a deeper hole of debt.
As a city, we had a chance, we thought, to step in and say, we think this is unethical and immoral, and we don't want it in our city.
Abby ZAVOS is with the Northland Justice Coalition, the group that gathered signatures for a November ballot initiative in Liberty. The ballot measure proposed limiting the number of short-term lenders in the city to one for every 15,000 residents, and adding a $5,000 permit fee for those businesses, with money going to enforcement and education. It passed overwhelmingly.
82% of the voters said, this is not a good business, but if it's going to be here, we need to cap the number of businesses we have, and we need to make sure we can do enforcement and education for people to help those who need them.
It was incredible to be a part of something like that, to see that happen from start to finish. So it's even more sad now to see how easily that can be undone.
ZAVOS is talking about what happened in Jefferson City last Monday. Representative Curtis Trent, a Springfield Republican, added new language to a banking bill. It says cities cannot charge fees to installment loan lenders if they're not charged to all lenders. In Missouri, many payday lenders are also registered to provide installment loans. That's why advocates fear their regulations will be thrown to the wayside.
They could sue the city, and according to that, if they prevail, the city would be responsible for all the fees and attorney costs and everything related to that.
The legislation would also allow installment lenders to charge a fee if someone decides to pay by card. Now, Representative Trent's office told us he did not have any time to answer our questions because it's the last week of the session, but he did tell the Kansas City Star he doesn't think that his legislation is going to impact payday lending. The bill passed both the House and the Senate and is on its way to Governor Parson. Advocates are calling on him to veto this legislation and leave it up to cities.
I think it's time to send a strong message to the governor that the people want our local control reestablished, and it's important to us.
I'm consumer investigator REID, 41 Action News Today.